Hey guys, my name is Ken. In this video, I'm going over the top 10 growth stocks for 2021. I've spent pretty much time researching, and this is the list of stocks which I met a lot mentioned as a growth stocks by analysts, and I think they are the best buys. Make sure to watch all the way through to get the full analysis on these companies. I also appreciate if you make a quick trade on the like button and invest in the subscription to the channel for more useful content. And by the way, this video is sponsored by nobody. Buy nothing, get double of nothing. Just kidding, you can buy me a coffee to support the channel, the link is down in the description. So here are the top 10 growth stocks for 2021. Before getting to stocks list, a quick disclaimer from me. Please remember that before investing to any stock, you need to do your own due diligence. Use this video just as a starting point to do your own research. Just because stocks included in this video, that doesn't mean that you go out there and buy it. It's very important that you make own decisions. In the last year, most stocks have grown quite a lot. That's why it's important to diversify your portfolio with safer companies that have strong balance sheet. It's also important to buy index funds to really reduce your investing risk. The first stock on the list is Square. Stock ticker is SQ. This payments and point-of-sale solutions company Square have been a growth stock for a number of years now. Its revenue has grown at a compound annual growth of 41% over the last 5 years. Last quarter, its numbers were even more stellar, with sales up about 140% year over year. A big chunk of Square's revenue comes from the Cash App. This is the peer-to-peer mobile payments app. It's like Venmo. In the third quarter, Cash App's gross profits jumped 212% year over year, which accounts for almost half of Square's total gross profit, equaling $794 million. This is enormous numbers because just a year earlier, Cash App's gross profit accounted for only 25% of total gross profit. Square is now worth more than $100 billion, with analysts expecting earnings per share grow 38% annually over the next 5 years. The second stock is Amazon. The stock ticker is AMZN, which you all know well. While being one of the biggest companies in the world, Amazon has proven its ability to show spectacular growth rates despite its size, making it a member of 2021's best growth stocks to buy. For many years, Amazon denied its profitability, choosing instead to expand its market share and putting every dollar back into long-term investments. Its international business just turned profitable in 2020, and for a company with $348 billion in trailing sales, Amazon's 37% growth rate last quarter is stunning. And the reason that the Amazon is on this list because it is still looking to disrupt other parts of the economy, reportedly planning its own primary healthcare services business it will offer to large employers. With healthcare spending accounting for the more than 17% of the US economy, Amazon has its eyes on the price. I know the prices can be too much for some stocks, but if you use brokers which allow buying and selling fractional shares, it shouldn't be an issue for you. One of them is eToro, the link is down in the description. Next stock on the list is Netease. The ticker is NTES. This is a Chinese online gaming company. It may not be expanding as quickly as Square or Amazon, but its strong track record of growth, pipeline and valuation make it an attractive growth stock to buy for 2021. Sales growth over the last 5 years was more than 38% annually and remains impressive with a 27.5% growth rate in last quarter. There are games in development which are based on already popular franchises such as Harry Potter, The Lord of the Rings, Diablo and Pokemon. In 2019, the company began a policy of paying out between 20 and 30% of earnings as a dividend to investors, which happens every quarter, and this practice currently yields around 1%. The fourth stock on the list is Nautilus, with ticker NLS. We all know that Peloton is considered as the high-end home exercise bike company, but for the money, the competitor in Nautilus is the best stock to buy. Nautilus doesn't just make its namesake workout equipment, the company owns Bowflex and Schwinn, and it's also getting into the subscription workout business. Last quarter, Nautilus revenue jumped 152% year over year. This sort of pandemic-fueled growth can't last forever, but at about 13 times forward earnings, Nautilus looks like a steal. Next one is Alibaba Group. The ticker is BABA or BABA. Investors shouldn't be entirely focused on the US in their portfolio. And when looking abroad, one of the most attractive landscapes is China, with a population about 1.4 billion. More importantly, the Chinese middle class was expanding rapidly too. Probably China's middle class already exceeds the entire population of the US. This is a huge secular tailwind for the country's largest e-commerce company, Alibaba, which despite doing roughly $90 billion in annual sales, grew revenue by 30% last quarter. In late December, the Chinese government announced an antitrust probe into the business, leading to a sell-off and giving a nice opportunity to investors to buy Alibaba on the dip going into 2021 at just 17 times forward earnings. Next stock on the list is Fiverr International. The ticker is FVRR. Fiverr is an e-commerce marketplace matching buyers and sellers in the fast-growing gig economy. Freelancers can connect with employers for a wide range of services. As more buyers use Fiverr to find freelance talent, growing demand attracts more sellers to the platform, bringing the deeper talent and a wide range of services, in turn attracting more buyers. Fiverr is expected to break into the black and not to look back when full 2020 results are in. And top line growth is bonkers, with revenue jumping 88% year over year last quarter. But need to say that you should probably expect Fiverr to be volatile. Shares have roared about 750% higher in 2020 and at more than 40 times sales. The stock isn't really cheap, but with momentum and exploding profitability, Fiverr might be a risky growth stock for aggressive investors. Seventh stock on the list is Editas Medicine. The ticker is EDIT. Editas is arguably the most speculative of the best growth stocks for 2021, as its value is fully driven by its potential to successfully spearhead futuristic, groundbreaking technology. One of the few pure plays on the CRISPR gene editing technique, one of the Editas scientific founders, Feng Zhang, conducted pioneering research critical to the development of CRISPR technology, which essentially allows humans to edit DNA. The $5 billion Editas has a candidate in clinical trials for the treatment of some diseases. Although Editas' long-term prospects look promising, investors seeking to bet on the future of CRISPR technology on a more diversified way may consider owning another stock as well, with ticker CRSP. The next one is IRobot, with the ticker IRBT. IRobot might strike some as a silly name, but take one look at the company's financials and you'll realize it's no joke. Founded in 1990, the company makes robotic cleaning products that automate home cleaning process. Its two leading products are the Roomba automatic vacuum and the Brava automatic floor mop. Business is on the upswing, with revenue jumping 43% year over year last quarter, as consumers placed more importance on their home surroundings during the pandemic. At about 16 times earnings, iRobot's 18% annualized earnings growth, which analysts expect in the next 5 years, comes at a discount. iRobot is also venturing to a new product line of educational coding robots, which could be teaching your children to program. Number 9 on the list is Twitter, with the ticker symbols TWTR. Twitter has enjoyed a unique position in the market for years as a live, crowdsourced tool for unearthing current events on a real-time basis. Twitter remains a unique technological tool and increasingly vital part of modern society. Growth in Twitter's monetizable daily active users has increased sharply in the last 2 years. Revenue is expected to jump by roughly 22% in 2021 as advertising revenue recovers. And also, there is a talk of testing a subscription model for some aspects of Twitter, and if it goes into action, investors will likely applaud the effort. And the last but not the least stock on the list is Roku, with the same ticker symbol. This growth stock not for the faint of heart. Trading at more than 28 times sales, Roku is not yet profitable, and analysts expect 2022 to be the first full year of profitability. In the meantime, growing Roku's share of the TV streaming platform market is the name of the game. Last quarter, active accounts grew 43% to 46 million, while streaming hours grew 54% year over year to 14.8 billion. Advertising on the Roku platform makes up the bulk of the company revenues, as platform revenue jumped 78% last quarter. And the recent addition of HBO Max to Roku's platform illustrates how the company's rapid growth makes it more desirable to streaming apps, which makes Roku more useful to consumers, powering a feedback loop that drives its business. That said, I hope you guys got some good information out of it. If you liked the video, drop a comment. Here are more other videos about personal finance and investments. Make sure to subscribe to the channel, smash the like button and notification bell. See you in the next video.